You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 19th day of February, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first one is our live training room. That one's private, members only, and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial, when Michael joins us in a bit, he'll show you exactly how to do it, step by step, piece of cake. And then we'll get you indicators indicating today, and then your trial will actually begin tomorrow. But don't worry, you'll still get 5 consecutive trading days on the trial. No credit card required. We want you to focus with a clear head so you can make a well-informed and intelligent decision at the end of the trial as to whether or not what we do is right for you. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down to where it says Noon Broadcast, click the link, fill out the 30-second registration form. You're done. What will happen going forward is every trading day, you get an email about an hour before this broadcast starts. In that email, there's a link. So at 12 noon Eastern, all you do is click the link in the email, and it'll log you right into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Now, there'll be days when you're out of the office, away from your desktop, but you still want to join live. And there'll be days when you're just busy and can't join live, but want to catch up later. You can do both of those via our YouTube channel, which is easy to remember, youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,700 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, but you can poke around and you can see, again, thanks to the power of YouTube, where we started all the way up to where we are now, day by day. Again, youtube.com/CFRN. As you can see, our daily schedule is posted right here. So we're going to dive into our devotional. And this is the last day, 7 of 7. Overcoming fear, worry, and anxiety. Today's scripture, Hebrews 11, verses 1 through 2. I'm going to share it from the Message translation. The fundamental fact of existence is that this trust in God, this faith, is the firm foundation under everything that makes life worth living. It's our handle on what we can't see. The act of faith is what distinguished our ancestors, set them above the crowd. Again, that was Hebrews 11, verses 1 through 2. So on the final day of overcoming fear, worry, and anxiety, we're going to talk about keeping the faith. Are you keeping the faith? What is the state of your faith? If you're a Christian, you have faith in God, particularly the faith in Him that leads to salvation. But that's not the question being asked. Rather, what do you depend on most in your day-to-day life? Do you primarily focus and depend on your feelings, your fears, your thoughts of what might happen? Where do you look for confidence as you face the challenges and trials of life? What is faith? The word that's commonly translated faith in the Bible means more than mere belief. It does mean belief, but it also implies dependence and trust. Faith, because it incorporates dependence and trust, also embodies action. This action can take many forms, as we see in the list of examples in Hebrews 11. If you have the time, you really should consider reading all of Hebrews chapter 11 for a grand summary of God's actions on behalf of those who put their faith in Him. Otherwise, feel free to meditate on these following verses. Now, faith is the certainty of things hoped for, a proof of things not seen, for by it the people of old gained approval. After detailing examples of the faith of Abel, Noah, Abraham, Sarah, Jacob, Joseph, Moses, the Israelites, and Rahab, the passage continues. And what more shall I say? For time will fail me if I tell of Gideon, Barak, Samson, Jephthah, of David and Samuel and the prophets, 33 who by faith conquered kingdoms, performed acts of righteousness, obtained promises, shut the mouths of lions, 34 quenched the power of fire, escaped the edge of the sword, from weakness were made strong, became mighty in war, put foreign armies to flight. Now that's Hebrews 11:32 through 34. Belief that doesn't eventuate in a changed life isn't true biblical faith. It's not that faith can't be weak at times or that it doesn't struggle, but rather that faith is living. It moves. It can be perceived. That's because faith that is true faith trusts and depends on God. Because of what Christ has done, you can watch your fears fly away, knowing that they've been vanquished by the one who alone has the power to dispel them. So questions you may ponder. What's the difference between belief and faith? What's the evidence of faith? Take time to think about what you've learned through this 7-day devotional and summarize your thoughts in a prayer of trust and thanksgiving. Let's pray. Heavenly Father, thank you for the gift of faith, the assurance of things hoped for, and the conviction of things unseen. Strengthen our hearts to trust in your promises, even when we cannot see the way ahead. Just as those before us were commended for their faith, help us to walk in obedience and confidence, knowing that you, God, are always faithful. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. And happy Wednesday. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 123 points, which for the Dow, it's not a lot. NASDAQ's down 3, not much at all. S&P 500 is up less than 1 point. The Russell 2000 down 8. It's like the markets are really waiting on those minutes from the last Fed meeting. Really quiet. In the commodity basket, crude oil up 64 cents, trading 72.49 last. That's a gain of almost 1%, or $640 per contract traded. Gold down $4, trading $29.45 last. Silver down 31 cents, trading $33.06 last. That's a drop of almost 1%. In the Asian markets at the close, the Nikkei fell 105 points. The Shanghai gained 27. The Hang Seng fell 32. Now for the Shanghai, a gain of 27 points, that's almost 1% for the Shanghai. And in the European markets at the close, FTSE down 54. The DAX down 410, that's almost 2%. The CAC down 96, almost 1.25%. So we had a mixed day in Asia. It was a red day for the UK. And at this very moment, it's a mixed Radio Wednesday here in the US of A. The S&P is positive by 1.5 points, and that's the only reason it's mixed. But the NASDAQ's down just over a point, so it's basically unchanged on the session. So, as long as I see green on the screen, well, I thought it was just going to go red, but we'll leave it at that. It's a mixed Radio Wednesday due to 1.5 points of green from the S&P 500. Well. All right, on to the news. The U.S. and Russia have agreed to work towards ending the 3-year war in Ukraine following high-level talks in Saudi Arabia yesterday. Secretary of State Marco Rubio and Russian Foreign Minister Sergei Lavrov met for more than 4 hours and outlined key principles, including reestablishing embassies, appointing a high-level team to facilitate negotiations, exploring economic and geopolitical cooperation after a ceasefire, and committing to ongoing dialogue. This meeting signifies a shift in U.S. foreign policy under President Trump, whose administration has called Ukraine's bid to join NATO unrealistic and said Ukraine may need to concede territory. The talks mark the most significant engagement between top U.S. and Russian diplomats since Russia's invasion of Ukraine in February of 2022, and pave the way for a possible meeting between Trump and Putin. Ukraine and European nations were not included in yesterday's discussions. And here's the takeaway from this. Zelensky, who we've now sent about $100 billion to, maybe more, I don't know. You lose count after a while, has said he would not recognize any agreements made without Ukraine's participation. He probably should rethink that. Sending $100 billion of taxpayers' money to a foreign country, that in and of itself is questionable. But then you start asking questions like, well, where'd the money go? What'd you spend it on? I mean, we're making sure that the pensions of government officials in Ukraine are still getting paid. I don't mean to sound cold-hearted at all, but is that the responsibility of the American taxpayer? I mean, our president and many others don't feel that Ukraine is even a candidate for NATO. But yet we've spent all this money and nobody can give us an accounting of where it went. Imagine if you tried that in your own life. Apple making news today. Apple revealed its iPhone 16e yesterday, a budget-friendly iPhone that includes the company's Apple Intelligence platform and its first in-house designed modem. The iPhone 16e features a design that's more closely aligned with Apple's mid-range and high-end iPhones than its previous entry-level phone, the iPhone SE, and comes complete with the company's Face ID facial recognition technology and an upgraded camera system. It will be available for purchase February 28th for $599. The iPhone 16e includes the same A18 chip used in the $800 iPhone 16 and the $900 16 Plus, as well as a single 48 megapixel camera around back. Apple says the camera will also feature a built-in 2x telephoto zoom for close-up shots. Apple stock was basically flat on the news. The 16e includes a 6.1-inch OLED display with a cutout at the top to support Face ID that's reminiscent of the iPhone 14. Apple's iPhone SE offered a far smaller 4.7-inch screen. So, I don't know if this is going to excite all the Apple fanboys out there or not, but it will make owning an iPhone affordable. Make Apple affordable again. What's that, Moffo? Yeah. Make Apple affordable. No, I guess it's just Ma. All right. Apple had news. Microsoft's got news. Microsoft today announced a new kind of quantum computer chip that it says will make quantum computers useful in years rather than decades. The chip called Majorana 1, no idea if I pronounced that right, uses what Microsoft says is a new type of material called a topoconductor, which the company claims takes advantage of a new state of matter that is not solid, liquid, or gas, but a topological state. The upshot is that Microsoft says its approach will lead to chips that can perform complex tasks needed to research topics including material sciences and healthcare. Quantum computers are specialized machines that can handle calculations that would take classic computers like the smartphone or laptop you use every day or your desktop hundreds or even thousands of years to complete. That's really hard to wrap your mind around. They do this by using what are called qubits. Qubits are similar to the bits used in standard computers, represented as zeros and ones, that chips translate into the programs we use every day. But thanks to the quirks of quantum mechanics, qubits can exist as both 0 and 1 at the same time. Yes, that's a little mind-boggling. Microsoft's advancement comes a little more than 2 months after Google announced its own quantum computing chip called Willow. We talked about that when it came out. According to Google, Willow is important because it corrects errors in calculations that occur when quantum computers use an increased number of qubits, a problem that has vexed researchers for years. While the Microsoft and Google announcements are impressive, they don't provide a clear picture as to when quantum computing will be useful in real-world applications. Big science on the way. Instagram. You know, I never really fell in love with Instagram. Maybe you do. A lot of people do. The president did. Instagram is upgrading its direct messages, also known as DMs, with a handful of new features that makes its messaging system more competitive with alternatives like Apple's iMessage and other third-party apps. On Wednesday, Instagram users globally will gain access to tools to translate messages across 99 languages, tools to schedule and pin messages to their chats, music sharing features, and more. Notes Instagram, the new feature, will be initially available to both iOS and Android users, as web access will not arrive until later. The music sharing edition could particularly appeal to younger users who often discover new music through social apps like Instagram and TikTok. To access the feature, you'll tap on the sticker button in the Chat Composer screen, then tap on Music. Then you'll be able to search for music and share a 30-second preview of any song in Instagram's music library through group chats or a broadcast channel. Well, I'm sure the Instagram users are very excited about all of this. From Bloomberg, Alibaba faces a key test in its earnings presentation tomorrow, after a deep-seek sparked rally added more than $110 billion to its market value. Hong Kong listed shares of Alibaba have surged nearly 60% from a January low on excitement over its artificial intelligence model. Co-founder Jack Ma's meeting with top officials and a tie-up with Apple, that's come even as the company faces concerns over the impact of fierce competition and China's struggling economy. Options traders are predicting a bigger than usual stock reaction to the results. Shares have shot past analyst price targets, trading at technically overheated levels and at the highest earnings multiple in 2 years. Stocks fell as President Donald Trump's latest tariff threats stoke concern about a trade war. Trump said he'll likely impose tariffs on cars, chips, and drug imports of about 25%, with an announcement as soon as April 2nd. The tariff noise continues. Today's Federal Reserve minutes will probably show no rush to cut rates. And last on the news slate, Donald Trump's top economic advisors want to lower Americans' borrowing costs by targeting a rate that is influenced more by Wall Street and financial markets than by central bankers in Washington, D.C. The latest sign of that strategy came from the National Economic Council director. He made it clear at the weekend that he is more focused on a 10-year Treasury yield than on any quick monetary policy changes at the Federal Reserve. He told CBS's Face the Nation in an interview over the weekend, "One way to tell whether markets think we are getting inflation under control is to look at longer-term interest rates that the Fed doesn't affect directly. If we get inflation under control, then that takes pressure off the Fed." So that's the news for now. Let's take a look at Logic 247. Tough holiday week. Market structure just is what it is. Although it's a lot better than it was yesterday. But not by a lot, I guess. We're in week 342 of Logic 247. That's our 24/7 around-the-clock Emini alert service. Over the last 342 weeks, we've issued over 19,000 individual handcrafted alerts, and what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. This week, I don't know if that number is correct. Is that correct? Maybe. I guess it is. If not, Valerie will straighten it up this afternoon. So far on this holiday week, there were no alerts Sunday. We did put some out Monday night. We've issued just 12 alerts. Again, it's due to market structure. When Valerie did the recap at 8:30 a.m. Eastern this morning, we were still waiting on the outcome of 3. That gave us 9 actionable alerts, of which 3, or 33%, would have been stopped out. Again, based on market structure. Last week, we had 5% stopped out. Now, who knows? By close of business Friday, that number we're looking at right now, it could be higher or it could be substantially lower. But over the last 41 weeks, we've averaged 20% or less being stopped out. Now, the real purpose of the alerts is to help you to learn how to read the chart. Yeah, you can trade them, but you need to be able to look at a chart and, with the use of our humble indicators, instinctively know what the next high probability move is. Whether it's futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. Before you can truly learn how to trade, you need to learn how to read the chart, how to spot potential resistance, potential support, and find the windows of opportunity in between. Once you see it, once you understand it, you can't unsee it. So again, just be sure to use them for the purpose they're intended. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Every logic alert has an entry price, an initial target, usually additional targets, and a final trade to target. Again, by using a 30-minute chart and drawing horizontal lines at those numbers that are in the alerts, that will help you learn to read the chart. Now, long before we had Logic 247, we had our original alert service, the concierge trade alerts. And they're different. Number one, they don't come out around the clock. They're posted as a static report right before the Globex Open on the evenings that I'm able to get them out that early. And when I'm not, then it's shortly after the Globex Open. I think it was 10 minutes after Monday night. Yeah. But last night, got them out 5 minutes before the open. If you're a member or trial member, be sure to read this. It's important. If you don't understand it, ask. I'll explain it. So, what this means is 5 minutes before the open last night, all of our members and trial members had all of these targets: the ES, the Dow, the Russell, crude oil, the NQ, gold, and silver. 5 minutes ahead of the open. So let's go look at the chart. We'll start where we always start, and that's the daily chart of the S&P. Now back over here is the all-time historic high put in on December 6th at 61.78.75. Yesterday we had an outside day, or you could call that a bearish engulfing candle, because we had a higher high and a lower low than the previous day. And it's in the proper context, but the fact that it's a doji, I'm just going to call it an outside candle for now. And it looks like we're in the process of creating another doji. 2 daily dojis back to back. That would be interesting. Not that it's never happened, but it's kind of unusual. I suspect the markets will get volatile when those Fed minutes come out this afternoon at 2 p.m. Eastern, and we may see some volatility. Now the step line has gotten directly above blue and climbing. So if we were to just consolidate sideways, now I talked about yesterday being an outside day, today's an inside day. What does that mean? Well, today's low is higher than yesterday's low. Today's high is lower than yesterday's high. Today's high, 61.57. Yesterday's high by 3 ticks. Yesterday's high was 3 ticks higher. So we failed at that critical point. Sign of weakness. The fact that the step line is now directly above blue and climbing. One more day of sideways consolidation, and the step line will cross blue and climbing. When that happens, we expect price to retrace back to the BBC. Now the green line is called the BBC because it just stands for bull bear cross. When price crosses above the green line, we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and expect lower prices. above the green line, bullish, expecting higher prices. And you'll notice that the pullback to the BBC holds more often than it doesn't. But eventually it will trade through. And then, just like here, when it traded through, when it pulled back, the pullback held. And we got a leg and a retracement, pullback held, and then we got a leg, and then we traded through again. But this pullback and this one and this one, and even these have all held. You're like, well, wait a minute, it's way below the green line. Yeah, but it's still touching. As long as it's touching, that means it held. So, I mean, we're not that far. Yesterday's high, 61.57, 75. Today's 61.57, and the all-time high, 61.78. We're certainly in striking distance. Is it possible we could hit it this week? It is. It absolutely is. I mentioned yesterday that if we continue consolidating, that the BBC would rise up to where the trend line is, and so far that's happened. So I think a lot of eyes are going to be waiting for those minutes today, and different people are going to interpret it different ways. So I'd be on the sidelines till the markets calm down and resume their normal ebb and flow. Except the ebb and flow has not been normal now for really a couple weeks. Whatever you trade, whether it's futures, stocks, crypto, Forex, ETFs, I encourage you to spend 2 minutes with the daily chart of whatever you're going to trade before you start trading. Institutional traders are the ones who move price because of their account size and the size they trade in. They look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it has everything to do with account size. So, by looking at the daily chart, you get a peek over the shoulder of the deep pockets, a free peek over the shoulder of the deep pockets, just to see what they're doing. I mean, they are the quote-unquote smart money, right? Well, they were confused yesterday. A doji means indecision. And a doji is simply price opened here, ran way up here, ran way down here, and closed right where it opened. And now to see a repeat of that today, it's unusual. Very unusual. You're also able to identify major areas of resistance that you can't see on your smaller time frames. Like the high of this candle was 62.25. 57.75. 57. So the next major obstacle overhead is 62.25. So if we break yesterday's high, then you've got potential resistance there, and then right there, right there, right there, and then there. We got blue and climbing below us. We got the perfect stack. But again, if we don't get volatility out of that news today at 2 o'clock, then what happens? Well, the step line crosses, we get a retracement. But I do anticipate that we'll see that little flash of green. I do anticipate some volatility this afternoon. Okay. The 30-minute chart is where all the alerts are created. Logic 247, the concierge trade alerts. There's nothing magic about 30 minutes. It's just a time frame I chose years ago. They say if it's not broke, leave it alone. That's what I've done. The vertical lines separate today, Wednesday, from Tuesday, from Monday. The horizontal lines are the weekly trading zones. Like this is 6110/6111, 6123/24. I used to put both numbers on there, but I like to keep my chart as clean as possible. So, because everyone gets the zones Monday morning, 6:15 a.m. Eastern on. Weeks where Monday's a holiday, they come out Tuesday morning at 6:15 a.m. Eastern. But once they're posted, they're carved in stone for the entire week. They don't change in any way whatsoever. We've published the zones for our members every week for the last 15 years, as of this past December. We're now heading towards 16 years. When price rises up to a zone, we expect resistance until proven otherwise. When price drops to a zone, we expect support until proven otherwise. Here we spiked it, but then closed back above it. And when red and falling turns to blue and climbing, we anticipate higher prices. So this was yesterday's closing candle. This was last night's opening candle. So this is the Wednesday session, but it began last night at 6 p.m. Eastern. So the opening candle, now remember, everybody had the targets 5 minutes ahead of the open. We're above the BBC, we have blue and climbing, we got the whole perfect stack thing. This candle opened at 43.75 and ran up to 52.75. That's 9 points. You only need 2 points to get your goal for the day. We hit the long target, and basically the zone right there. Remember, this was a doji yesterday, and at the moment we got a doji going on for today on the daily chart. So resistance is always going to send the market send price looking for support. Blue and climbing turns to red and falling. You should safely assume that the move up is over for the moment and prices are headed lower. When the black step line crosses from, see how on the way up you had price, step line, blue and climbing, BBC? Right there, when that step line crossed blue and climbing, that's an indication that blue and climbing is probably turning to red and falling, which it did shortly thereafter, and we're headed back to the BBC. Now the pullback holds more often than not. It did hold for a few hours, then it finally gave way. And where did it take us? It took us down to the zone below, to the tick. Support sends us looking for resistance. Remember, the pullback holds more often than not. And this was resistance times 2 because you got a zone right there and the BBC. So now that we found resistance, we're going to go look for support. We consolidated at the zone for a couple hours, and then we reached down and we touched the short target to the tick. Right where red turned to blue yesterday. So from the long target to the short target, and we almost made it back up to the long target here. We're still consolidating at this zone. Only 3 things happen when price encounters a weekly zone. The most common, 70% of the time, is consolidation. 20% of the time is rejection. 10% of the time is the slice. That's when price slices through a zone like it's not even there. When it runs out of steam, it will typically retrace back to the zone it sliced through and then continue in the direction of the slice. So right now we got blue and climbing. We're above the BBC. We need to overcome this zone, and then this high is at 53, 61, 53, 75, and the target's at 57, and then you got the zone at 58/59, and the highest weekly zones up there is 61.99/6200. On the Dow, here's where we opened. We made a run at the zone overhead. The ES got there, but step line crossed. Blue and climbing turned to red and falling. And down we go. We hit the zone to the tick, got a little bounce. Found resistance at red and falling. And we traded through the target. Okay. And then we found support, this low right here from yesterday. You can see is this low right here. Support will send us looking for resistance, which we found at the zone. Resistance sent us looking for support, which we found at the zone below. Support sent us back to resistance, the zone, and the BBC. And now we're sitting on top of red and falling. See how it's trying to curl? See on the ES, it's already made that curl. So the Dow's lagging that just a little bit. Okay. This is red and falling, turning to blue and climbing. And we're probably about to see that right here. When red and falling gets directly below price, it actually becomes potential support because it's probably on its way to becoming blue and climbing, which is bullish. On the Russell, this was the open last night. We're above the BBC, blue and climbing, all that. Okay. This resistance we were unable to overcome. See this high right here? And so that's a real sign of weakness. We took out this high, but just barely. This high was 2310. We made it up to 2301 and a half. We're always suspicious when we take out a previous high by just a little bit. So we come back to the zone, find support, that bounces us into red and falling, which is bearish. Then we get the bearish cross where the red line gets below the green line, and down we go. We spent 30 minutes hanging out at this zone, and then we dropped to the target. Traded through the target. Market found support here in an odd spot. Okay. But it bounced us back up to the zone. And remember, when we move up to a zone, we expect resistance. When we drop to a zone, we expect support. Support sent us to resistance. Resistance sent us back to support. Red and falling's turned to blue and climbing. So right now we're up against this zone and the BBC. So the BBC and the zone resistance has sent us back down to potential support at blue and climbing. If we continue to consolidate sideways, blue and climbing will rise, and then price will have to make a move. We'll either get above this zone, and you've got a bearish cross right up here. Okay, when you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. So if we make a break to the upside, it's just shy of the zone. Okay, maybe a couple points shy. It's where the red line gets below the green line. In Q, this was the open last night, and it was just a straight shot right up to the long target. Little sideways action. Blue and climbing turns to red and falling. The BBC holds, and then we get below the BBC. Get a leg, retracement. The pullback held. Holds more often than not. From there, we drop to the zone, and while the drop to the zone held, I mean, we spiked it, we hit that target. Now we're back above the BBC, and we've got blue and climbing. So we're heading into, we've got potential resistance right here, based off this swing high. If we overcome that, then you got the zone. Now, 22.57 to 22.67, that would be $200 per contract traded. If we get through the zone, then you've got the target, and you've got the resistance that was put in early last night. All right, we made it to crude, and we'll pick up there. Michael's going to give us a recap of what happened in the live training room this morning.
Okay.
And then we'll do some live trading on the TradingView platform. We'll finish the recap of the alerts, and we'll wrap things up with our good word for the day.
All right.
Okay, Mike. It looks good.
Good. All right. You should be seeing it. Good.
Yep.
Here we go.
Looks good.
All right. Good afternoon, everyone. Today is Wednesday, the 19th day of February. 19th day of February. If you have not taken a free trial with us, go here to mytradingiq.com. Click on the purple button right here. There is no credit card required for the trial. When you click on that purple button, it's going to bring you to this registration page right here. Now, on this page, all that we ask for is your name, your email, and your phone number. All this stuff in the middle right here. Fill that out. They're just multiple choice questions. Fill them out accurately, please, because if you fill this one out wrong, you may not get any emails. Down here at the bottom, if you want to use NinjaTrader charts, we have limited NinjaTrader charts available to you, the old school stuff. Give us your machine ID on that, and we'll enable the Ninja charts for you. And if you want TradingView charts, you really want to get TradingView charts. All right, I think they give a 30-day free trial still on the TradingView, and it's only to get charts and live data, it costs you $22 a month. So you want to get the TradingView charts. All right. You're going to have to give us your TradingView login ID. Now, if you don't have TradingView charts, if you don't have them, go here to trading platforms and scroll down to right here where it says TradingView platform. Click on that right there. Okay, when you click on that, you will, well, it's a 3-minute video, but essentially it's going to bring you to this. You click on this, and then that's going to bring you to this page right here, where all that you need to do on this page is click to annual, choose essential. If you're going to have two contracts running at a time, or 2 markets running at a time, you can have the essential. I use the premium, but you don't need the premium. The plus would likely be more than as much as you would need. All right, 4 charts at once. I use the premium because you have to use the premium for certain things premium people can do. But the essential works for most people. All right, log into that. Give us, this is what we need from you. This thing right here. If you hover over the upper left-hand corner, it says logged in as. For me, it says TV trades, or it'll say CFRN, or for you, it'll say something else. You're logged in as something. Whatever you're logged in as is what we need. I went back and forth with a fellow this weekend, probably 10 different emails trying to explain that. That's what we need right there. That's what we need. They kind of hinder the whole process if you don't know what you're looking for, because they give you the option to log in with your email, and your email is not what we need. You know, they give you the option to log in with Facebook or to log in with Gmail or things like that. That's not the ID that we need. The ID that we need is what you're logged in as on TradingView over here. Okay, so get that to us, and then we'll get everything you need to you. We had a pretty good day today. Today we what was I going to say? Today is the 19th day of February 2025. We're up 304 ticks on the NQ, 15 ticks on the Russell. We lost 2 ticks on gold, and we made 19 ticks on the ES. That put us at $1,812.50 in one contract this morning. Today took 4 minutes and one trade to get to the goal for the day. At that point, we're up $1,450 with 10 contracts on. And we took a total of 29 trades. So on the month now, we're at $11,750, 10 days in, averaging $1,175. Now, if you were to quit trading, I'm sorry, I don't know why I said that. I skipped right over here to this part. I'm not there yet. On the year now, we're at $43,927. That's over 30 business days, averaging $1,464 per contract for a 2-hour business day. Now, if you were to quit trading when you get the goal for the day and you're at 1 contract per month, so far this year, you would be on your 2nd contract, and you would only have to work 4.88 hours so far this year, doing it just like me. And you would have made $6,655. If you quit trading when you got the goal for the day and you did it just like me, you'd be on your 2nd contract at $6,655, only working 4.88 hours. That averages out to $1,362 per hour. That is where we want you to be. You see in here the number of trades to get the goal for the day so far this month. 1, 2, 3, 4, 5, 6 out of 10 days. We got it on the first trade. That's why I like to start at 9:27. Usually between 9:27 and 9:30, you're going to get a good setup that will give you the opportunity to get your goal. That's why I like to start at 9:27. For a while there, I started at 9:15, and usually between 9:15 and 9:27, I'd have 1 or 2 stop outs, and I'd have to recover from that to get the goal. So I changed it, and I filtered it, and 9:27 is the time. So that was even with the rough beginning of the month we had. You know, this month we ended up getting rid of our trading platform that we had been trading on for over a decade and switching to this one. This one is a great platform. Luigi, I don't know if you're in here right now. Let me just check and see if you are in here right now. No, you're not. Okay, well, he was just telling me he went through the steps out here on trading platforms to get the Sierra chart, the Sierra installation. There's more information. When I made that, it was before I realized that we're losing the OEC backend. So I need to remake this video. So there's more steps that need to go into this. You do need Service Pack 10 for $36 a month. You need the Denali for $12.50 a month. But you need to connect to the CQG Web API in the back end. What I was doing in this video, I connected the OEC trader, not the OEC trader, the OEC backend, and that no longer exists for connection. So to do that, you had to go backwards. To connect to the OEC, you had to go backwards in the version number of Sierra. To connect to the CQG, you have to have the current version. So there's some things in here that are erroneous. I will try to get that fixed. All right, and this is all the CQG stuff that I know. This is the meeting that we had with Bert. It's not the latest one that we had with Bert. That's the first one that we had with Bert. I should probably put the latest one in there too. I still haven't watched that. But as far as platforms go, that is all the information that you need to trade with us. You need to get Sierra chart. I mean, you need to get TradingView charts. All right, to use the stuff that we're using in the room, you need to get TradingView charts, and that's it. So let's get into the trades. This morning on the gold is 104. On the gold this morning, we only had a few gold trades. Here's a handful of them. And you see all the ones that I missed in here. I missed a ton of them in gold. And I had, where's gold? Gold is right there. I'm not showing the two initial trades that I had. Oh, here's one. Okay, well, here's one of them. There was one trade, my very first trade on gold, I got one tick, and then I stopped out on this one. That put me at minus 14. Then I got 2 ticks on that, put me at minus 12. Then I got 10 ticks on that, put me at minus 2. I missed all the other trades that happened in here. Through here, let's see, there was a trade there, a short trade there that worked out great. There was a long trade right here that would have stopped you out. Actually, it was on this bar. That would have been a break even. There was, going all the way over to here, there was a long trade here that would have been a break even. You see, it's got the number there for me. It does the count for me. Would have been a break even. There was a short trade here that would have been profitable. There was, sliding all the way over here, a short trade here that would have been profitable. It would have had deep pullback, but it still would have been profitable. A long trade here that I missed would have been good. A short trade here that I missed would have been good. And the actual trades that I took, I ended with that one over there. That was the last one I took with a plus 10. And during the break, there's a trade right now that you can take right now on the gold. And the entry point should have been from right here at 39.3. I just entered at 39.4. All right, so you had an opportunity right in there. Let's take a trade on gold. Let me put this on top, slide it over here. All right, and that was what gold did today. Right, now look at the Russell. We only had a couple of trades on the Russell, and they're both right here. This is the whole morning on the Russell right here, the whole day on the Russell. Let me slide this. I'm going to go to break even on this gold trade. Hang on there. Okay, I'm going to actually lock in some profit on that. There's 5 ticks in profit on the gold trade. I'm going to lock in 10 ticks. I was going to lock in 10. I want to see it get down one more tick, and then I'll lock in 10. Okay, but we have 5 ticks locked in right there. This is not painting correctly. You see how there's some bars missing right in there. I don't know what is causing that, but it's happened on a couple of different markets today. There, I am going to go to 10 ticks now. That is $1,000 right there with 10 contracts on. It's 1,200. $1,500 right there with 10 contracts on. And we're out with $1,500 in profit. How simple was that? All right, and that was just selling short, not on the Russell. When the gold got into the overbought by itself right here, I went short on the open of that bar. Simple. All right, it doesn't get too much easier than that. It does get a little bit easier, but not too much easier. Like on the Russell, we just had these couple of trades right here. One was a plus 13 and one was a plus 2. So that one right there, they were actually backwards. You see the labels? The one that says plus 2, that means it only went 2 ticks into profit on that particular bar. But the next bar went down and we ended up getting 13 ticks on that. And on this one, the 13 means it went 13 ticks into profit from the open of the bar. I only got 2 ticks on that one. So I got my actual gains are the opposite of what the labels say right there. But this trade right here, this one took 20 minutes, over 20 minutes. And then as soon as it ended, I changed directions and went long on that one. During the break, we had just one trade. Actually, this wasn't even during the break. This was before the break. There was a short right here that would have stopped you out. And there was a short right here on the Russell that would have gotten your money back. Okay, it looks like there was a long trade right here too. That looks like it only went 3 ticks into profit. That would have stopped you out too. So the Russell did not give much up today at all. All right. And the ES, we had a pretty good day on the ES. Did we stop out at all? No, we did not. The ES, well, right here was our first trade on the ES. And on that trade, we picked up 8 ticks. We had a break even. Then we picked up 1 tick there to get us to plus 9. Then we picked up 2 ticks there to get us to plus 11. 6 here to get us to plus 17. And 2 more there to get us to plus 19. And that was our whole morning with the ES. During the break, it broke into a nice trend right here. A really nice trend right there. And there was one trade right here on the ES that only went 3 ticks into profit from the entry point. So that would have stopped out. One trade right here. Actually, that was not a trade for in here. There was a short right here that you could have taken right there. That would have given you some decent profit. And a short right here. That would have stopped you out. And a long right here, that would have been a break even. So the ES gave up some decent trades. Remember, the divergence trades work best when you're not trending. They work best in the chop. when you are trending like this, once it broke into a trend right here after this leg, once it broke into a trend, then the two trades, we went over this morning. As a matter of fact, I might still have this right here. We went over this morning. All right. If you guys want to take a look at this, the different types of trades that we were doing or looking at in the room. Now, I do the most aggressive in the room. That's got the divergence. The other two trades that are not aggressive use the YBR. Okay, so if you want to trade with the trend, you can use the YBR for that. The aggressive one is to buy. You can see the purple areas there. Those are the aggressive ones. What you would do is buy the open of the next bar in the direction of the YBR when price goes into the oversold or the overbought. So right here is when it goes into the overbought. Right here when it goes into the oversold. You buy the open of the next bar. The most conservative way is to go in the direction of the YBR when price comes out of the overbought or the oversold. All right, so these right here, you look at the circles of those colors. That's the most conservative. Okay. I do the most aggressive in the room. I do these right here. That's what I do in the room. Right. If you want to take a screenshot of this, you can. This is on a video on YouTube, so you can all go out there and look at this. All right. And we discussed that this morning. So when it goes into a trend like this, you have to transition, or you can transition into the trending type of trade setup. So like right here, once it broke into a trend and it pulled back here, you had two options. You do it the aggressive way like I do and just go long on the open. That is also aggressive with the trend in this case because you're above the YBR. Now, the real aggressive way that I do, you would have shorted the open of that bar and taken some profit on the pullback. And you probably would have tried to short the open of this bar too, and that wouldn't have worked out, right? But the conservative way, you would have waited till it came out of the oversold and gone long on the open of that bar. Would have gone long on the open of that bar. You'd be looking for it to come out of the oversold right now to go long. If this bar goes down anymore, it's going to flip direction here. The YBR is going to change. If this bar ends up closing down, it's going to change direction. But the aggressive with the trend, you would have gone long right here. And the way that I normally trade aggressive, you would have gone long right there. Okay. So that's the way the yes worked out this morning. We ended up with plus 19 ticks on the yes. Now the NQ, let me slide this all the way over here. NQ. All right. So here we go. On the NQ, the first trade that we took on the NQ, this is where we got the Gulf day. We picked up 29 ticks on that one. And then right after that, we got 48 ticks on that. So we went from 29 to 77. Then we went to a break even, then to 81 right there. And another break even. And then right there, we went from 81 up to 109. Then went to 117. Then break even. Then 165. Then break even. And here we went from 165 up to 213. Then from 213 up to 233. And 233 to 237. And then from 237 up to 284. And then a break even. And I think that was actually a 20 tick. There's one missing in here. I skipped one. But we ended up with 304. This one was actually a 20 tick win right here. And during the break, just to go over the stuff that I just went over in that screenshot, okay, we'll just do during the break. You're above the YBR. So when you're above the YBR, this one and this one are the two types of trades. I got to do this again and put a number 2 at the beginning of it. But this one and this one, 2 and 3, are the other types of trades you're going to do with the trend if you're using the YBR. Okay, so it would be long trades above this, right? Short trades below this, long trades above this, short trades below this. So right now, the blue's got to get, if you're doing trades with the trend, you don't need the slingshot. Okay, right here, the aggressive trade with the trend would be a short right now. The aggressive trade with the trend would be a short right here. You'd short this. This is the NQ. If I can find my NQ down, I will, because that is the overall aggressive trade that I take anyway. So this is an aggressive trade with the trend right here. Okay. Now the proper entry should have been here at 14.25, and I'm in a little lower than that. I'm in 1.25 below that. So I don't have the best entry on this, but I still think it's going to work out okay. We need 4 points, so it's got to get down here to 9 to get the stop to break even, right? It should go right through 9. It should go all the way down here through 95.50, through 95.50, okay? That's what it should do, and I'll just hit break even here in a second when it goes down to 9, and there it is. Okay, so stops at break even. I'm just going to lock in 4 ticks on this, 1 point. Now we should get all 48 ticks on this. We should easily get all 48 ticks on this trade. Okay, but I have 1 point locked in. So I'm going to get 1 point, or I'm going to get 12 points. One or the other. But you see, now the conservative, you'd be entering right here on the conservative with the trend. You'd be entering right here. Now you can see we just had a whole bunch of profit. I'm going to get 4 ticks, but we just had a whole bunch of profit in that. We had like 20, 25 ticks profit in that. Using the aggressive with the trend and the aggressive way that I normally do it with and against the trend. I don't know. I've got to put the black line on. See, no, there was the way I do it wasn't even the trade. Okay, so the aggressive with the trend was a trade, and the conservative right here, you'd still be in the trade right now, but just barely because you would have waited for the down close. Right? Do you all see that? So in that case, the aggressive with the trend would have been the trade to take from right there at the open of that bar, right there. Okay. So you kind of got to make up your mind when you're trading, what you're going to do. You know, if you get into a choppy spot, if you're trading with the trend and you find yourself in a choppy area, like this could turn into chop right here because it didn't go down any lower right here. If you find yourself going into a choppy area, then this is the trend transition thing that you need to consider that you can do. You have all the tools to do this. You can just flip from being a trend trader right here to being a trend and counter trend trader right here. These divergence trades work best in the chop. Okay, so if you do go into chop like this, then you can just start looking for the divergence trades. Switch out of trend mode, switch into divergent mode. And that's all you have to do. I mean, this happens again and again and again and again every day. And you have the tools here in front of you now. Right? These numbers that you see here, they're labels. They're from a different trade setup that uses the TV trades range trigger. That's a TV trade thing, but they overlap. In a lot of cases, they overlap with the trades that we normally take. Like right here, there was right here there was an overlap. Now on that one, it went 27 ticks into profit. I don't think I got to break even on that. It went 27 ticks into profit. I got to break even. So, you know, you'll see all these green lines in here that happen to have a label on them. Those were overlapping trades. And all the trades that you see me taking right here that don't have a label, those are trades that were divergence trades. That did not overlap with the other ones. But that is it. All right. So now let's go all the way to the end and we'll see what we have going on. See if we can take any more trades in here. There's nothing here. The ES actually had a short right in here. Now, a question was asked this morning. Ron had asked me a question this morning. Ron's not in here. How have you notified? Yes, it's all me, Bart. And how you'd be notified? Well, if you signed up for it, then you've already been sent everything about it. Okay, if you signed up for it, and I think you did, then you already sent all the information that you need to get into it. All right, so over here right now, the blue going down into the oversold is a long trade right here. It hasn't gone 5 ticks into profit, so it's still a valid trade there on the gold, right? So I just took that trade on the gold right there. The entry point would have been the open of this bar right here, 37.5. I'm actually in at 36.9, so I'm in 6 ticks better than the actual entry point on that. All right, so I'm going to be looking for this to give me 5 ticks in profit, and then I'm going to bump the stop to break even. Okay, that's what I'm looking for on the gold trade. I don't have anything here, here, or here right now, but this is almost to the point. It's going to get up to 0.4, and that stop will go to break even. So Bart, you will be sent automatically. They send a thing an hour before it. So at 2 o'clock, it'll be sent another thing, a reminder, I think. Okay, that's automatic. It sends out a reminder, I think, an hour before. And nothing there, nothing there, nothing here yet. Okay. But I'm pretty sure you should have been sent everything already anyway, but I know it's an automatic reminder that gets sent out an hour before. So look at this to get up to 0.4 right here. We want the yellow to get up to 0.4. When it does, I'll move the stop to break even. Right, now the thing about this trade is oops, I didn't mean to do that. The thing about this trade is it got flat down here at the bottom. Got flat down here at the bottom. That's the thing about that trade. So normally that would have been, it probably would have stopped us out to the tick so far if we would have got it at the entry that it had suggested right here. I think the stop is 15 ticks, right? So the entry would have been here at 0.5, and no, it only went 10 ticks against. So it wouldn't have stopped out yet either. Even on that, it wouldn't have stopped out yet. But I don't think. All right, but that's the only trade we got going on right now is that one. Over here, this, the black's leading, so I don't think that's going to turn into anything. On the NQ, we need that to get down into the oversold. Okay.
I think we lost your volume.
Oops, I guess you did. I was saying I just stopped out on that one. And I haven't looked at the Bitcoin in a while. I haven't gone out here to look at the Bitcoin in a while. How long ago did you lose my volume? It wasn't that long ago, right? Because Bart responded. Okay. Okay, good. Just when I stopped to take a drink, probably. All right, so the Bitcoins, that's the NQ, that's not Bitcoin. This, oh, it's the NQ. All right, I thought that was my Bitcoin one. Let's just make it the Bitcoin one because that's Bitcoin futures, Bitcoin US dollar. This is the actual Bitcoin. Let's put that on a daily, 1 day. Ooh. All right, so I hadn't really thought about the labels being that big, having huge numbers like that. That's pretty crazy. So this gave a buy here at 81,423. So that doesn't seem right. Those numbers don't seem right. 93,076. 153,886. That number doesn't seem right. 262,059. Something's wrong. Oh, I know what it is. It does a conversion to ticks. That's what's wrong. So it's not converting this correctly. That's what's wrong. I was going to say that does not seem right at all. All right, so you can't do Bitcoin with those labels, but you can do it just by looking at the indicator down here. And gave a short there, gave a short there, gave a long at the open right there. Short at the open there, short at the open there, a long at the open there, a long at the open there, a short at the open there, a long at the open there, short at the open there, long at the open there, long at the open there. Oh, that had a big drawdown before it went up. Interesting. All right, let's go back over here and see if we got any. Oops, not 3. I'm going to 4. 3. All right, so they went together here. You see how the black and the blue went together right there? That's not a trade setup. Black and blue together there, not a trade setup, not a trade setup, not a trade setup. So I don't have trades anywhere right at the moment. None. All right. We have. All right, I gotta find my my in key DOM. I seem to have lost it. Here it is. All right, so looking at the DOM on the ES right here. All right, down below you got this number down here at 45.50, and up above you have that number right there at 54. So it's in an area where it should get choppy, given that the numbers are pretty close on both sides. It's in an area where it should get pretty choppy.
It's high impact news at 2 o'clock, right?
Is there?
Yeah, Fed minutes.
Oh, I didn't realize that. I didn't even look at the calendar today. Well, that is a big deal. Today is Wednesday, right? 2, yeah, Fed minutes, high impact. Huh. I totally forgot about that. And the stock changed today. Now, tomorrow we're going to have the natural gas comes out at 10 and the crude comes out. Or isn't the crude coming out at... Okay, it normally comes out at 11, but tomorrow they're going to have the crude coming out. It looks like at noon instead of 11. That's weird. They normally have the natural gas comes out at 10:30 and the crude comes out at 11, but they're doing it at 10:30 and 12 tomorrow. Interesting. Lots of high impact stuff on Friday. So we have initial job list coming out tomorrow in the pre-market. And then lots of high impact stuff on Friday. Huh. Interesting. Interesting. Yeah, I didn't realize that the minutes are coming out today. I said I've been off all day. I just hope I make it through the rest of the day okay. I made 7 mistakes this morning trading. 7. That's a lot. All right, so the ES, it has, if you're doing the conservative with the trend, you would have gone short right here at the open of this bar. If you're doing the aggressive with the trend, you would have gone short right here at the open of that bar. If you are doing the aggressive overall without the trend considered, you'd be going long if that gets into the oversold. Okay. So those are the 3 trade setups that can be considered depending on what you want to trade or how you want to trade. Okay, over here on the gold, right? I'm not on the gold right now. If that goes into the oversold, the only trade that you would consider would be the aggressive overall. Right now, it's got the conservative right here. The conservative just triggered at the open of that bar with the trend, and the aggressive with the trend would have been the open of this bar right here. That would have been really close to stopping you out. Conservative one seems to be the one that's working out, but right now there's an aggressive overall. There's an aggressive counter trend trade right here from 34.7. And you can see I am not filled yet. And I'm going to cancel the order now because it's gone 5 ticks into profit. All right. Did you see the transition right there? It's pretty easy to do, right? This turned into an aggressive counter trend trade right here. The trend trade, the conservative trend trade would have been from the open of this bar right here, the down close of that one, the open of that bar, the down close of that bar, the open of that bar is what you would have shorted. and then it flipped right into an aggressive counter trend trade, which would have been that whole move right there. And again, right here, you got a conservative trend trade from the open of this bar right there. That's conservative trade with the trend. The aggressive trade with the trend would have been the open of that bar. The conservative trade is the open of this bar. Okay, because you would do it without the ultimate slingshot. So the aggressive trade with the trend, that means below the YVR you're taking shorts, would be the open of that bar. The conservative would be the close of that bar, right? I put the conservative one on because that's the only one I could put on. And I'll go to break even on that and lock in a couple of ticks. And this will be the last trade of the morning. It's 11:30 right now. I mean 1:30, sorry. 1:30 right now. This will be the last trade of this session. Okay, I just locked in 5 ticks on that. So where should it go? It should go down to here before it finds some support, right? 34.6 right here. So if
Michael,
I can get 10 ticks out of this, I'll take it.
From YouTube. Outer Edge Trader says that the DOM shows sim. He asked me, were you sim trading or were you live trading? I said you were live trading. Did you have a DOM up that said sim?
I popped one up a minute ago that did.
Yeah.
But no. Typically, it is not. This DOM right here does not say sim. You see, it does not say sim. It usually says sim up here somewhere when it's sim. Okay. But that's the way these DOMs work. When it's sim, it says it right up there on the top.
Did you get that, Outer Edge Trader?
Let's see. They don't say sim.
And in answer to your other question, no, we're not some prop firm. We don't do prop firms.
Which one was that? That was the Russell. Let me slide that back over there. And we'll slide that back over there. Okay. All right. And it's time. It's 1:32. So let me show you this. If you have not taken a free trial with us, then go here to mytradingiq.com. Click on the purple button right here. There's no credit card required for trial. Click on that purple button and it will bring you to this registration page where all we ask for is your name, your email, and your phone number. Down here at the bottom, you can give us your machine ID if you have NinjaTrader, and we'll give you the charts we have for Ninja. It's old school stuff. It's not the most recent stuff. If you want the most recent stuff, then use TradingView. Give us your TradingView login ID and we just set up. All right. And that is it. With that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep. Okay, recap of the morning session.
Today, it took, what did it take? 4 minutes and one trade to get to $1,450 with 10 contracts.
Good job.
Thank you. Thank you very much.
All right, guys, we'll pick up where we left off. We were on crude oil. Okay. This was the opening candle last night at 6 p.m. Eastern. We're above the BBC, so we anticipate higher prices. Took us right up to the target. And again, the targets were posted 5 minutes prior to the open last night. We hit the target. We got a retracement. Almost back to the BBC. Price always reverts to the mean. In our case, the mean is green. It's called the BBC. Just stands for bull bear cross. As you can see, the pullback holds more often than it doesn't, but eventually it trades through. Okay. So when price is unable to pull all the way back, Then that means there's a lot of buying pressure. Boom, send us right up to the target, which again was shared with our members and trial members 5 minutes before the open last night. So this is how the market works. It goes leg, retracement, leg, retracement. Now when we hit the weekly trading zone, we consolidate it. That's what happens 70% of the time. And we get a leg, we get a retracement, and we get a big leg and a retracement. And when price rises to a zone, we expect resistance till proven otherwise. When price drops to a zone, we expect support till proven otherwise. So we bounced off the zone up into red and falling, and that took us back down now to the top of the long target. And as you know, when that happens, okay, we trade through a target, whether it's the long one or the short one. When price returns to that area, in this case the long target, it will quite often become support. You see it happen again and again, day after day. But you're on the verge of a bearish cross here. That's when the red line gets below the green line. So I suspect that this bounce will probably end here at the black step line or at the zone. Okay? All right, gold. Here's where we opened last night. Got red and falling overhead. That's potential resistance. So we drop to the BBC, the pullback holds. And then we get a nice little shot here. But if you go look left, you'll find out why there's resistance there. That sends us back down to the BBC. We get below it. We actually lose contact on this candle and this candle, but red, and we're just consolidating. Look at the size of the candles, they're very small. Once red and falling turns to blue and climbing, and we're back above the BBC, we got the perfect stack, price, step line, blue and climbing, BBC, and it takes us right up to the target, to the tick. So we bang our head up against that target for a couple hours. Remember, these are 30-minute candles. So we come back to the BBC, pull back holds more often than not. Support sends us to resistance. Resistance sends us back to support. Then we get the bearish cross where the red line goes below the green line, takes us right down to the weekly trading zone. When price drops to a zone, we expect support till proven otherwise. So we got support, support, support. Now we finally broken through. And with red and falling overhead and resistance, if this little candle moves up a little bit higher, yeah, just like that, we'll probably see the short target. But keep in mind, 2 o'clock, high impact news, so be careful. Silver. Here's where we opened. We hit red and falling. That knocked us below the BBC, but that was short-lived. We get back above the BBC, see red and falling, turns to blue and climbing. Leg, retracement, and then a leg. Takes us right up to the target, to the tick. Resistance will always send the market looking for support, which it found momentarily or for a few hours at the BBC. We finally broke below it, and then we got the perfect stack heading down. Price, step line, red and falling. Took us all the way down to the short target. And from there, we bounced right up to the zone. But there's more to come because the step line has crossed red and falling. When the step line crosses red and falling, that's an indication that price is most likely going to retrace back to the BBC. Just like when The step line crosses blue and climbing. Pull back to the BVC. One last look at the daily. Okay. When we started the broadcast, we had a doji, but we got a little bit of green showing now. Okay. Today's high so far, 57, 61, 57. Yesterday's high was 3 ticks higher. But when those minutes come out at 2 p.m. Eastern, we should get some volatility. Up and down and up and down as institutional traders digest the information. Put your mouse in the desk drawer. Let the excitement play out. And then when the market returns to its normal rhythm, that's when you want to get back in the water. To become a member, just send an email to support@cfrn.net. In the subject line, put "I want to become a member." In the body of the email, put your name, your phone number. Not going to call you, but we're going to send you an email that has all the information you need to know about becoming a passport holder. What it means, what you get, the whole nine. And there'll be a link that you can click to become a member. The main thing, or the first thing, is 2 hours of live training every trading day from 9:30 a.m. to 11:30 a.m. Eastern. 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. They buy books, they buy courses, they watch YouTube videos. Nothing wrong with those things. They're just no substitute for a living, breathing teacher who will literally take you by the hand and teach you how to do the job. It's an interactive environment. Live trading, live markets, real money, and you are trading along in your demo account until you qualify to go live, asking every question that pops into your head. Because it's a mechanical methodology, you'll run out of questions pretty quick. But along with the group training every trading day, you have access to private one-on-one mentoring, no extra charge. Strategy you learn, the indicators you own as a passport holder are fluid across all markets, all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. You get the Logic 247 alerts round the clock. You get the Concierge Trade alerts the second they're published each evening. Monday morning at 6:15 a.m. Eastern, you get the weekly trading zones. And once they're published Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. You're able to attend the members only workshop every Thursday night. And you get the golden key that opens all the private channels in Telegram. We have both public and private channels, but once you become a passport holder, you've got access to everything. Just send the email to support@cfrn.net, and in the subject line, I'm ready to become a member. All right, let's wrap it up with our good word for the day. Never stop learning and growing, part 1. Wisdom excels folly as light excels darkness. Ecclesiastes 2:13. The most important skill you can acquire is learning to learn. Gifted people can sometimes act like they know it all, which makes it hard for them to keep growing. Teachability isn't so much about competence and mental capacity as it is about attitude. It's an innate hunger to grow. It's a willingness to learn, unlearn, and relearn. The famous American basketball coach, John Wooden, said, "It's what you learn after you know it all that counts." Only as you remain teachable will you keep growing and continue to make an impact on the world around you. Lifelong learning is an ongoing daily pursuit. The Roman scholar, Cato the Elder, started studying Greek at 8 years old. When asked why he was tackling such a difficult task at his age, he replied, "It's the earliest age I have left." Unlike Cato, many of us regard learning as an event instead of a lifelong process. It's estimated that only 1/3 of adults read an entire book after leaving school. Why? Because they view education as a period in life, not a way of life. That's a staggering statistic. Only 1/3 of adults read an entire book after leaving school. Science confirms that while your physical body may atrophy, your mind retains much of its capacity for continued growth. Every stage of life presents lessons to be learned. You can choose to be teachable and keep on learning, or you can close your mind and stop growing. Try this simple experiment for a week. Ask others for their advice and deliberately withhold the advice you would normally give. At the end of each day, write down what you have learned by being attentive. You'll be amazed. And that's our good word for today. Part 2 tomorrow. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.